Hi guys, Ugodre here, and this is my money brief brought to you by Nairametrics. So today I want to talk about the relationship between high interest rates and substandards and fake products, especially products that maybe like medicine and everyday things that we buy now and then. So there's not been a lot of study around this subject area, but there are quite a few out there that you can read up. But today I just want to make a case. I think that there is a strong relationship between high interest rates and a lot of fake products. Of course, I think it's pretty clear. I did some couple of years ago relationship between inflation rate and fake products, but I think interest rate also bears some kind of a relationship here. Think about it. So interest rate is basically the lending rate that, or maybe I should just call it lending rate that banks used to lend money to businesses. So today, interest rates is anything above 32, 33, some cases 35%. I've even seen 40% as well per annum. So companies are borrowing, for those who need to borrow, are borrowing at as high as 40% per annum just to do their business. And so that is pretty much a high cost. So think about it. If you do a business that with 10 million naira, that costs you 10 million naira, for example, you need to first of all add the 40% markup that you're going to pay the bank. So assuming it's 40%, let's even say 30%, so 3 million. So there's a 3 million on top of that 10 million, so that's 13 million. And so you need to have a return, isn't it? So let's even say you factor in a return of 20%, and so you're likely going to sell that thing at maybe 15 million. Of course, returns all depends on the volume, but let's just use this as a basic example. So already you're seeing that a lot of businesses will need to price their products at an even higher margin for them to make some profit if they rely a lot on borrowing. And apart from the fact that borrowing is even expensive, even if you look at interest rates for like treasury bills is like 21, 22%. And if you look at the real yield, they will tell you it's like you're going to close out to 30%. So even risk-free money is expensive, right? So why would anybody give you money when you can just put that money in treasury bills? So bottom line is that interest rates are pretty high, and so for you to even make a decent return on your business, you would need to a large extent, invest, put a margin on your product. And so when you put that margin on your product, it means that your product is definitely going to be expensive, isn't it? It's going to be pretty expensive, and remember that we're also dealing with a populace, or Nigerians are facing a lot of hardships. So purchasing power is even currently low for a lot of Nigerians. So where purchasing power is low, people won't be able to afford expensive quality products anymore, and they start to look for alternatives. And when they start to look for alternatives, they start to look for cheaper alternatives. So when you're looking for cheaper alternatives, cost is the most important thing, and even higher above quality. And so when cost is higher above quality, people just don't really care that much. And people who are also importing, or people who sell, or even local manufacturers know these things, and so they're also going to say, look, what's the point putting so much quality inventory out there when people can't really afford it? So why don't I just go for things that are cheaper that people can afford? And that's really how businesses work sometimes, and these things happen. And so when it does happen, you're not going to see like suppliers and buyers now sort of have a common ground, and the common ground right now is cheaper goods, not really quality. And so you're going to be seeing a lot of those things, and I'm sure you're already experiencing a lot of cheap quality cheap fake substandard products as you buy them every day. You're going to see that a lot, and I think we all need to be very careful because that is typically what happens when an economy that is experiencing high inflationary environment like we are, or in a high inflationary environment like we're currently in. So that's what tends to happen. So you need to be careful, and high interest rate is a major factor in all of this. Ironically, high interest rate is here today because of combating inflation anyway. So that's the only tool the central bank can use, and because they think if they raise interest rate, then maybe that can drag down inflation. But sometimes these things can be counterproductive if you don't implement it well. And even if it's not counterproductive, it does have its downsides. And the downsides is that as businesses struggle to meet up with cost, they need to find a way of passing those costs. And since they can't pass every cost, because consumers also have weak purchasing power, they would want to always go for cheaper products or products that can meet people's price point. And when that is what they want to do, then quality now becomes compromised. So that to me is the relationship between high interest rates and fake a substandard product. It's my own case. I think there's a relationship. You can read it up. There's been a few research out there that tries to also pin these things together. Some add a lot of other factors, including macroeconomic hardship and all that. But I think it's pretty clear how interest rates can affect. And you can speak to companies; they would also tell you that is their experience. What is your experience? Are you into any business where interest rates are pretty high? How are you passing that cost across to your customers, or are you absorbing the entire cost yourself, or you're just sharing it? Share a comment. Let me know, or maybe send me a DM. All right, guys. Thanks, and that's my morning brief for today. Do have a profitable day ahead. Bye. Peace.